As part of the probate process, you will need to figure out if inheritance tax is due. It's crucial to get this right. Overcalculating means you might pay too much to HM Revenue and Customs, while undercalculating could make you personally financially liable. In England and Wales, inheritance tax is typically due when an individual's estate is worth more than £325,000 at the date of death. And this figure can change with each budget. If the estate is less than the £325,000 threshold, then inheritance tax generally won't be due. You will need to keep in mind that lifetime gifts made by the deceased may reduce the available individual threshold. If the deceased was married or in a civil partnership and their spouse or partner died before them, it may be possible to combine part or all of their individual threshold to increase that £325,000 limit. The tax due on the amount above this threshold is 40%. However, if the deceased left more than 10% of their estate to charity, this rate can be reduced to 36%. If the deceased home is left to children or grandchildren, a further allowance of £175,000 may be available. This is known as the residence nil rate band. And only the share owned by the deceased can be included. And again, if previously married or in a civil partnership, it may be possible to increase the £175,000 threshold where property was left to a spouse, civil partner, children or grandchildren. But if an estate is left solely to a spouse, civil partner or charity, then no inheritance tax will be due. Calculating this can be daunting, so if you need any guidance, give us a call.